let's dive into this. We're going to break down a really interesting theory that's been making the rounds. The idea that we're not just in some crypto lull, but actually on the very edge of a totally new kind of bull market, one driven by the big players. This quote from a pretty prominent market analyst really sets the tone, doesn't it? So, the idea here is that while a lot of everyday investors might be feeling nervous or just bored after months of prices going sideways, behind the curtain, a completely different game is being played. So, first things first, let's talk about where the market is right now. According to the analysis we're digging into, this recent period of flat price action, it's not a sign of weakness. No, it's being seen as a launch pad, a coiling spring getting ready for a huge move up. And this is the real kicker, the thing that underpins this whole idea. We're not talking about another 2017-style frenzy led by everyday investors. The whole argument is that this time, it's fundamentally different. This is about Wall Street, big corporate treasuries, and maybe even entire countries getting in on the action. Okay, so what could possibly be driving all this big money interest? Well, to really get the forecast, we've got to zoom out a bit from crypto itself and look at something bigger, the US dollar. Turns out, its performance is a huge clue for what might happen to assets like crypto. So, what if I told you there's one chart, just one, that could give us a major hint about where crypto is headed next? Well, analysts keep pointing to a specific chart that has historically moved in the opposite direction of crypto markets, and that's the one that tracks the strength of the good old US dollar. And that chart is the DXY, the US dollar index. The easiest way to think about it is like a scoreboard for the dollar against other major world currencies. Now, it's not a crystal ball, of course, but it gives us this incredible snapshot of global liquidity, basically how much cash is floating around the world's financial system at any given time. Now, what makes up the DXY is super important here. You can see it's dominated by the euro and the Japanese yen. And what that means is what the central bank of Japan decides to do, or what happens with Europe's economy, that can have a massive ripple effect on the dollar, and you guessed it, on crypto too. Okay, so this slide just lays it out perfectly. The theory works like this. When the DXY is up, the dollar is strong. That basically sucks money out of the global system, making everything more expensive. And that's bad news for riskier stuff, like crypto. But when the DXY goes down, the dollar is weaker. That's like turning on a fire hose of cash into the system, and that cash has to go somewhere, often into assets like stocks and, of course, crypto. So what are the analysts predicting right now? Well, the expectation is that the DXY is about to drop again. And that move? That's seen as the trigger, the one thing that could kick off a huge altcoin season and push Bitcoin to a new all-time high. This whole macro picture with the dollar, that's one really important piece of the puzzle. But now, let's talk about the players getting into the game, because that's what's making so many analysts say, this time, it's different. If you think about every other crypto bull run, it was us, right? It was everyday people, retail investors, driving the hype. But the argument now is that this cycle, this one, belongs to Wall Street. For the first time ever, you've got these regulated, easy-to-use products like the spot Bitcoin ETFs that have created a legit, super simple on-ramp for huge firms like BlackRock and other major funds to get involved in a massive way. And if you want to understand the sheer scale we're talking about, just look at this number, $86 billion. That's not the total for all the ETFs combined. That's the assets in one single Bitcoin ETF, BlackRock's. This isn't pocket change, folks. This is a tidal wave of institutional money. So you've got Wall Street. Who's next? Well, the really wild prediction is that the next big buyers could be entire countries. The idea is that as governments see other nations acquiring Bitcoin, they might start to see it as a strategic reserve asset, kind of kicking off an arms race to grab a piece of a very limited pie. So, with all these huge new players potentially jumping in, let's zero in on the case for the OG, the original cryptocurrency, Bitcoin. This quote from Michael Saylor, who's a huge corporate investor in Bitcoin, just nails the story that institutions are telling themselves. They're not looking at it as a way to buy coffee. No way. They're seeing it as digital gold, a true store of value for the 21st century. So, you've got all these different factors converging at once. You've got incredible access through the new ETFs, big companies putting it on their balance sheets, the hope of clearer rules from regulators, and this idea of countries buying in. And it all crashes into its single most important feature. It's absolute, unchangeable scarcity. 21 million. That's it. Forever. That number will never, ever change. And that hard-coded scarcity is the foundation of the whole digital gold idea. It's what makes the thought of giant institutions and countries fighting over a slice of this tiny pie so powerful.
But the story doesn't end with Bitcoin. The theory is, once the big money is comfortable with Bitcoin, it's going to start looking for even bigger returns. And that's when it starts spilling over into other major blockchains, or altcoins. And there are two that everyone keeps pointing to.
So this table really breaks down the two heavyweights, Ethereum and Solana. Think of Ethereum as Wall Street's choice. It's been around, it's secure, it's reliable. But then you have Solana, which is being pitched as the new Wall Street. It's built from the ground up for insane speed, the kind you'd need to put traditional stuff like stocks and bonds right onto the blockchain. And here's the kicker. Look at that size difference. Solana is just a fraction of Ethereum's size, which means any big wave of new money could have a way, way bigger impact. And this isn't just some random theory. This quote from Matt Hogan, he's the CIO of a 15 times billion-dollar asset manager. It just shows you how serious this idea is. He's saying Solana was literally architected, built for this one purpose, to become the rails for the future of finance. So, we've got the dollar, we've got Wall Street, we've got the individual crypto stories. What happens when you mix it all together? What does the timeline actually look like? Okay, so according to this analysis, the first domino to fall is regulation. There's a big bill in the US that could finally bring some real clarity to the crypto world, and that's expected to just open the floodgates. After that, the prediction is for a major altcoin rally in early 2026. But, and this is a big but, it's not all smooth sailing. The very same analysts are warning that sometime in 2026 or 2027, the dollar, the DXY, could suddenly spike. And if that happens, it could pull the plug on the whole party and crash everything. And that leaves us with this one final massive question. The entire case we've just walked through, it all boils down to this incredible tension. You have a potential tsunami of new, serious institutional money about to crash into an asset class that is, by its very nature, incredibly scarce. So the question is, what happens next? What happens when the biggest financial players on the planet all try to buy something that there just isn't enough of to go around? Maybe that first quote was right. Maybe most people really do have little idea what's about to happen.